Good afternoon, everybody. Thank you so much for joining us today for our Mastering Risk Essential Strategies for Business Owners. My name is Prince Khan. I am a supervisor at the Brampton Entrepreneur Center / co-working space. And joined with me today is one of our volunteer mentors, Cardine Williams, who's actually going to be discussing the topic of mastering risk and her experience as a CPA, and of course, her experience in the insurance industry as well. But before we get into our presentation, just for those of you who are not familiar with the Entrepreneur Center, just to give you a quick 30-second elevator pitch, we are a co-working space located out of the downtown core in Brampton, and our whole mandate and goal is to help support local entrepreneurs from different avenues, helping you with running events or taking part in events, doing business consultations. We have 2 different grant programs to run for startups as well. And our whole mandate, like I said, is to really help you elevate your brand and your business. And we do that as best as we can to our abilities, and we're able to connect you to the right resources and do so much more. So if you haven't come in to see the Brampton Entrepreneur Center, please feel free to come by and just have a chat with me. And I'm more than happy to tell you about some of our services in greater level of detail. With that said, I would like to pass the torch off to our speaker today, Cardine Williams, who's actually been with the Entrepreneur Center for I'm not sure how long, but I think you were one of the first people I met when I actually joined the city of Brampton, or rejoined the city of Brampton back in July. And you've been a great asset. You've attended a lot of our events, so I'm excited to have you do this presentation for us and looking forward to it. So with that said, I'll pass the torch to you.
Thank you, Prince. I really appreciate the opportunity to share with your group, and welcome everyone. Thanks again for joining this presentation. My name is Cardine Williams, and as Prince said, I'm a CPA and I'm also an insurance broker. And my goal is to help business owners like yourself protect what matters most. And that's your business, your income, and all the people who depend on you. So let's dive right in. There is a quote by Gary Coyne. He says, if you don't invest in risk management, it doesn't matter what business you're in. It's a risky business. All right. So that's not said to scare you. It's said to get you thinking, because building a business takes a lot of heart, a lot of hustle, and a lot of sacrifice. And the truth is, most of us, we are so focused on growing that we forget to protect what we're building. So today, I'll be talking about how you can manage certain risks as a business owners, and I'll share a few strategies that you could put in place, and hopefully it's not too complicated. I don't make it too complicated, but feel free to post your questions in the chat and we'll get to them at the end of the presentation. So first question for you to think about: why did you become a business owner in the first place? Of course, the most basic is to generate income to support ourselves and our families. And ultimately, we want to be able to have time and financial freedom, to have flexibility and control. And for some of us, having a contribution, making a contribution to our community and having an impact, a positive impact, is important. And even so, building wealth and intergenerational legacy, passing something on to our kids and even our children's children. But when you think about it, what could possibly jeopardize these outcomes? Before I get into answering that question, let's look at the typical business structures that we have available to us. As a sole proprietor, you are owner and operator. Your business is not separate and apart from you. Basically, as the owner operator, you share in all the rewards of the business, but guess what? You also share in the risk associated with the business. And that liability is unlimited. It impacts both your personal and business assets. The other thing to note too is that the longevity of the business is tied to the owner's life. The partnership is quite similar, except that there are 2 or more persons engaging in business together, sharing, of course, again, the profits as well as the risks. In most instances, the liability is, again, unlimited, and business longevity is tied to the life of the partners. In a corporation, though, you have that line that separates the business from the individual. It's a separate legal entity, right, with limited liability for the owners of that business. However, especially for startups, in most instances, when you come to certain arrangements, especially financial arrangements, you are required to provide some personal guarantees, which basically exposes your personal assets to claims as well. But the opportunity here also is that the corporation, the life of the corporation is not tied to the life of the owners. So when you came up with your business plan, what were your thoughts for the future? What were your personal goals? How do those interrelate the plans for your business as well as your personal goals? What role does your business play in supporting your family and the success of your family, yourself, and your team? These are all concerns that have elements of risk that we need to address. For most businesses, there are certain key funding needs that a business owner must have plans in place for, or I should say, it is ideal that you have plans in place for these. These are the need for business continuity, making sure that if stuff happens, and this is life, stuff does happen, that the business can continue. If you have key players in your business whereby your income generating capability relies on them being able to show up, what safeguards do you have in place to make sure that if something happens to them, your business can continue? As I mentioned before, most businesses need external capital injection, right, to start and to support operations. What happens to your business if you are pulled out of the game for some reason? What are your contingent plans to make sure that you can satisfy these obligations in a pinch? And of course, we are in business for the long term, right? We have certain exit strategies that we're planning for. And some are unplanned. Are you prepared to have these play out? For example, a buy-sell agreement, which could be part of a partnership agreement or a shareholders agreement. How is this funded? And retirement. Who wants to work forever? Raise your hand. My hands are down because I have no plans to work forever, right? So when it gets to retirement, whether it be at 60, 65, 70, it's more than likely that you have another 20 to 30 years ahead of you that you will need income coming to you. What's your plan to make sure that you're able to have this income when you're no longer actively working in the business? So business continuity. This is making sure that if there are certain risks that imperil your business, that you have strategies in place to minimize, eliminate, or transfer these risks. And I'm sure as business owners, we already have one in place because it's often required, and that's commercial liability insurance, right? But that takes care of a peril like fire or flooding, or maybe you get sued. That's what that takes care of. But what if something happens to you? How will the business expenses be covered? Corporate liabilities, making sure that you can retain your team. These are things that need to be incorporated in your business continuity plan. So let's look at protecting your business and from the human element, right? The stuff that our lives, the stuff that happens in our lives impact our business, right? And we have to be prepared for those as well. So no matter your age, no matter your health, your level of success, a sudden blow of a critical illness or injury, whether it be heart attack, stroke, cancer, or a major accident, it can hit at any time, right? And when it does, it doesn't just impact you and your health. It can impact your business. It can drain your savings. It can bring your business to a halt. And you know what? Whether it be any of these instances, it is likely, we live in Canada, we have a good healthcare system. It is likely that you will survive. And what that means is ongoing medical care expenses. Are you prepared to handle this? Just to give you some stats to put this into perspective, 1 in 3 individuals will will be a victim of a stroke before the age of 65. That's before retirement. Does anybody here know anyone who suffered a stroke? Who've had maybe heart disease or cancer? These things are a reality. They can pop up, right? So how do you prepare for these instances? So the impact on the business and the impact on the family. As a sole proprietor, for example, if you don't show up for work, you don't earn income. Is that right? If you're active in your business, this is a significant consequence of not being able to show up for work. Loss of revenue. You could exhaust your savings just trying to sustain yourself during that time. And guess what? The bills keep coming, whether they are personal bills or bills of the business. What is your strategy to ensure that that is taken care of, that you can actually, your business can actually survive a period where you're seriously ill or have a serious injury? A critical diagnosis can put our lives in a tailspin, right? It can be devastating. It does shift our priorities from business to personal, right? And money and health, right? It's two things that honestly we maybe can't operate without. They're both important. So what strategies do you have in place to ensure that if you get diagnosed, how will your family survive? How will your business survive? How will you take care of medical expenses, equipment, surgery, rehab? A critical illness policy, what that does is actually provide you with a lump sum payout after you've survived for 30 days. And this comes to you tax-free, and you can use it for anything really to help you as you recover. So whether it be personal expenses, maybe it's medical equipment, maybe it's actually finding a replacement in your business. So have these contingents in place to ensure that if you can't work, you have money coming in. So while a critical illness coverage might provide you with a lump sum to take care of those big medical bills that might come at you up front, modification of your home, rehab expenses, guess what? Life does continue. You might also need a monthly payout into your bank account, cash in your bank account on a monthly basis to pay rent, mortgage, making sure that your living expenses are covered. A disability insurance policy can actually provide you up to 80% of your qualifying income for a period of 2, 5, or even up to the age of 75 years old. Do you know anybody who had an injury or a critical illness and they were not able to go back to work? Right? This could be anybody. It could be a chiropractor, it could be a physiotherapist, it could be an electrician, a plumber, falling off a ladder, meeting in a car accident. These things can take us out of our business. And guess what? Our families depend on that income. How will they survive? But it's not just a survival of your family. You want to be able to, after recovery, go back into your business. But what happens when your doors are closed? When you can't take customer calls? Customers move on. Competitors rush in, right? Would you want to be forced to close your business? Maybe even sell? If you don't want these fallouts, what you can do, in addition to having critical illness coverage and disability coverage, get business overhead expense coverage. What this does for an active business owner is make sure that their fixed contractual expenses are taken care of. So if you have a rental space for your business, if you can't work, you're not generating income, guess what? You can't pay that bill. If you have loans that you need to pay, you can pay that loan. If you have subscriptions, fixed expenses, admin staff, you can pay them if you're not earning income. But with business overhead expense coverage, it actually provides you with 24 months of payouts that can cover your contractual fixed overhead expenses. There are certain exclusions, for example, your sales team, because it can still work and generate income. If you do have a sales team, that would be excluded. But your fixed contractual expenses, imagine the peace of mind knowing that you can pay the loan on your vehicle, you can pay the rent for your space, and maintain all your essential services. This is providing you as a business owner with peace of mind. So again, there are certain questions that you must ask yourself. I have spoken to a number of business owners, right? They're operating in their business by themselves. Their spouse are not included, right? Maybe they're incorporated and they're the sole shareholder. What happens to you or your family if you're unable to work? Critical illness, disability coverage, business overhead expenses, it takes care of the business owner, right? But there are certain instances when you're not around and you have to take care of your family. If there's a partnership or a co-owned business, it is likely that you'd have a shareholder agreement or a partnership agreement. And within that agreement, if you don't have it, please go do it. Get the agreement in place and have a buy-sell provision inside of that agreement. That buy-sell provision tells how the business ownership or your interest in the business would be transferred either to a co-owner or to the family. But guess what? A buy-sell agreement is useless if it's not funded. Where would the money come from to buy out your other owner's interests? You need to have a source of funds for that, whether it be on passing, whether it be on a critical illness or a disability that takes them completely out of the game. Have that provision in place. And this is where solutions that the insurance industry offers can help you. Again, as we grow our businesses, we might start out as sole proprietors. We're the only one working in our business, but nobody wants to stay at that place. Everybody's looking to scale, right? Add new talents to their business. And if you should do this and add to your team a person who contributes to the bottom line of your business, whereby if they no longer act in the business, your revenue would be drastically reduced. This is called a key person. So guess what? Have provisions in place whereby you can have funds, money coming into your business to offset any loss of income, to provide you with time to find that a replacement for that key person. And how does it work? How does key person coverage work? Basically, in this situation for that key employee who has a specialized skill set or that reputation or who has those connections that make sure your business thrive, if something should happen to them that takes them out of the game, right? You would want to have either a life policy or a disability or critical illness policy in place whereby the business pays the premiums for these policies. So the business is the owner and the payer, and the person insured is that key person. So if something happens to them, the insurance company pays out a lump sum to you, which comes to your business tax-free as well, that you can use to help you through this transition process until you find that skill replacement. So that's what key person insurance does. But guess what? As I said before, we have multiple risks. We have corporate liability risk. When there's a personal guarantee involved, your personal assets are at risk too. When you offer personal guarantees for business loans and you are incapacitated, disabled, unable to work for extended period of time, who do you think will come knocking? Creditors, banks. What happens to your business if you're unable to pay those loans? Having coverage in place ensures that if something happens, whether it be the passing or a disability, you can pay your obligations, ensuring the survival of your business. How does it work? The business loan strategy, again, it is there to help the business repay outstanding loans that might be called or might be demanded if a key person, an owner, becomes disabled or passes. Whether it be a commercial loan, a mortgage, a joint venture opportunity that you've put up capital for, personal guarantees, or director's loan. The idea is to make sure that there's money coming in. You've passed that risk from yourself, from your business, to an insurance company. So when an event happens, the money comes into your business to cover these obligations. You don't lose your home because you've put a personal guarantee and your business cannot meet that obligation. You don't have to sell off assets of your business to meet obligation. So what happens? And to be frank, some lenders actually require that you have a life insurance policy in place if they're to distribute money to you, because it shows responsibility as a business owner to make sure that your debts are paid if something happens. So again, the business owns a policy and they pay premiums into this life policy with the key person or the owner as the insured. If something happens, the proceeds from this policy, this millions of dollars potentially, depending on the need, based on the assessment, would be paid back into the business. The business is then able to satisfy loan requirements by paying off these loans. And in most instances, they have capital, additional capital, to help with operational expenses, to help them make sure that projects that are in progress can be completed, to make sure that they can pull in new skill sets into the business so it can survive. All right, so I've kind of touched on the stuff that can go wrong, all right? But guess what? Risk management isn't just about reacting to the stuff that might go wrong, right? It's also preparing for what you want to go right, right? So like retirement, leaving a legacy for your loved ones. And how does this work? We are planning for the future. And we've talked about the dark side, the critical illness, the disability, and the death, right? But guess what? In some instances, we're building a business that we can sell. In some instances, we're building a business that will maybe pass to our kids, but we want to retire and still maintain a quality lifestyle. How do you do this? All right. And the thing is, not to wait until the last minute to plan for these instances. You need to be planning today, right? From the day you start your business, you need to be thinking 10, 20, and 30 years down the line. How will you be funding your retirement? And I know a lot of people think that, oh, I'm going to sell my business and that's going to be it. You know what? You can't dictate what the future has. Some of us have businesses that are hard to sell, right? And they're hard to value as well. So have a plan that you can build over time to provide for your future. So it's the spin-off from pay yourself first. It's pay your future self first, okay? And this succession planning is not just for big companies. It's for your family business as well, okay? So when it comes to planning for your future, whether your exit is to wind up the business, to sell the business, or to pass it on to your kids, you have to consider a few key things. One, taxes, of course, estate planning, and also your retirement income. And there are a bunch of other questions of course, you'll ask yourself, but I'm just highlighting those key ones. So again, for your corporate retirement strategy, I'm hoping you're seeing a trend here. How insurance can play a role in securing your future, in securing your income, and making sure that life's ups and downs, ebbs and flows, doesn't cause a financial catastrophe in your business or in your personal life. So how does a corporate retirement strategy work? With this option, you're actually using a permanent insurance policy. This policy allows you to actually grow a pool of wealth inside the policy that grows tax sheltered. This cash value is actually an asset, just like compared to real estate. as the value of real estate increases, that equity pool increases. In the future, some people use their real estate asset to leverage for cash flow to supplement their retirement, whether it be a HELOC or a reverse mortgage. You're leveraging equity built over time. Similarly, in your cash value life insurance policy, you can build an asset that you can leverage in the future to fund your retirement. The difference is that this money can actually come to you tax-free. Who doesn't love tax-free, especially at retirement when you're not actively working anymore? So how does this work? During the life of over time while working in the business, the insurance, the company, the small business purchases a permanent life insurance policy, and you have different options when it comes to permanent policies. That overpayment, that overfunding of the policy actually builds an asset. The asset can be tied to market type returns, or it can be non-correlated, meaning no matter what's happening in the market, your outcome is guaranteed. When you get to retirement, the corporation or that small business, in order to pay you retirement income, can actually leverage that asset for loans, collateral loans, that can be distributed to you as dividend. A lifetime of dividend, because you've built up this asset that grows tax exempt, right? So that's another thing. You get to get cash out of your business and have that grow tax exempt, and then leverage that later to create your own retirement plan inside of your small business. There's this quote that says, when you're young, it's okay to be broke. You have time. But when you're old, you don't want to be broke. It's not okay, right? So make sure that you have plans in place to take care of your future self, to ensure that you can have that quality lifestyle at retirement. So again, once you've enjoyed that 10, 20, or 30 years of retirement income because you've built up that asset inside of a life insurance policy that you've leveraged to fund your retirement, guess what? How does this get paid off? I know some people are saying, oh, that's a loan, it's a loan. How will it get paid off? What happens is when you pass, the insurance company pays out that tax-free death benefit to the company. The company then settles that debt, and the difference can be reinvested into the business or paid out to the beneficiaries or your family members that are left behind. Just to highlight, all these tools that I've mentioned, the payouts are tax. They're not reported on any T1, T2. This provides you with a level of control in your life, making sure that some certain outcomes are predetermined if the unfortunate situation happens. Would that provide you with peace of mind? It sure provides me with peace of mind. All right. I'm going to give you a wealth strategy that every business owner should think about implementing for themselves on a personal basis as well as a corporate basis once funds allow. Your life insurance policy, as I illustrated in the previous slide, the insurance industry is the biggest tax shelter there is. As a business owner, should you sell your business, capital gains, inclusion rate is going to be increased to what, 67%? What will pay that tax? If you spent years and decades building an asset, a legacy that you wish to transfer to your kids, could this handicap that transfer? A life insurance policy is a tool that you can use to create an asset and have that asset grow tax exempt. It's a tool that you can leverage because that asset, you can actually leverage it. It's contractually obligated that if you go to an insurance company and you have this asset, you can actually request a loan against it. This loan typically comes to you at a lower interest rate compared to market. You require no income verification, no credit score check. It doesn't show up on your credit report. And it's unstructured, meaning that you control your repayment terms. How will this impact the growth of your business? I actually call it an opportunity fund because it provides you with the flexibility and the wherewithal to pursue opportunities in your business and in your personal life as they come up. And again, you can rinse and repeat this throughout the course of your life. Let's say, for example, you are a landscaper and you need to buy a truck and other equipment to bring into your business so you can service your customers. You go to the bank. They ask you for 2 years financial statements, guarantees, your credit score, all of that stuff. It's a hassle. If you've built up over time a reservoir of wealth inside of your insurance policy, what you could do is just go to your insurance company and say, I need a policy loan. And they'll ask you, do you want it to be deposited into the account that we take your premiums from? As simple as that. So being a business owner requires that you have a certain level of flexibility. And flexibility does, in most instances, require liquidity. So to give yourself an additional option outside of traditional banking, think about creating this wealth reservoir for yourself that you can leverage as you build your business, as a backup plan in case of emergency or downturn, and also as a tool to fund your retirement. So we've talked about quite a few things. I know it might have been like drinking water from a fire hose, but guess what? I'm hoping that you have some ideas or some points that you need to, of course, go dig further into how they apply to you and your business. But ensure that you think about the succession plan that you have for your business, regardless of what stage you are in your business. You could be just starting out, you could be approaching maturity, you could be scaling your business, or you could be later on in life of your business. These are things that you should address. Your business succession planning, making sure that whatever the outcome is, there is funding available to pursue whatever strategy you take. Making sure that a call by creditors doesn't put you out of business. Making sure that if something happens in the short term, whether it be a critical illness or a disability that takes you out of the game for months and even in some cases years, you are able to fund your family's obligation as well as your business obligation. Making sure that the passing or the incapacitation of one person doesn't put you out of the game. Structure your finances to ensure that you're minimizing taxation. And as I said, the insurance industry is a tax shelter. Make sure, whether you're in corporate, whether you are employed, whether you are a business owner, this is one thing that everybody should consider doing. From the first day you start earning an income, you need to be planning for your retirement. As it is now, almost 50% of Canadians between the age of 55 and 64 have less than $5,000 saved for their retirement. That, I believe, is a crisis. So make sure that you don't fall into that bucket. And understand that the interdependency between your personal and your business. If one fails, the other fails. So put those safeguards in place for yourself. So thank you very much. I am happy to answer any questions and share additional information. Feel free to reach out to Prince and their team. They can help you get in touch with me, and my information is also on the screen. Are there any questions in the chat?
No questions yet, but feel free to unmute yourself if you do have a question. But just want to kick it off by saying, my father-in-law last 2023 September, my wife gets a call that he's had a bad accident. He hit his head really hard. He fell off a ladder, hit his head on a concrete thing. And he was out of commission for 3 months, ended up having a heart surgery at the same time. God knows, it just opened up a can of worms, but they were out without income from his end for months. So I totally understand how difficult it can be, and then he's been forced to retire. So these are things we don't expect to happen, but if you uh live on the analogy of it's an expectation that things will be okay, then you're probably going down the wrong path. You should always ensure that there's some form of safety in case something does happen. And in his case, luckily my brother-in-law was able to, he's a paramedic in Toronto, so right when he kind of finished his schooling, he was able to get sort of the family income going. So luckily for them, that was their I guess return. But no insurance, nothing. It just made things a lot more difficult. So I
And
totally get that part.
yeah, yeah. And you're so right, right? Not everybody recovers and is able to go back to what they used to do, right? And it doesn't impact just the person who had the incident.
Yep,
In some situations, a family member has to give up their income in order to provide care for that person.
correct.
So that means the household is out two incomes,
And not just
right?
that, like my wife was in the hospital for months, so she was a nurse for herself, right? But she couldn't work for 3 months, so that burden was extended to me, and it just made things more difficult because now the extended family had to now take on the burden. It's unfortunate, but
Exactly.
that's what happens, right?
Yeah.
So I totally relate to these things you're talking about. So we do have a few things in the chat here. Cardine's contact information is not on the screen. Not sure if there was a slide deck. So she does have info at moneymattersca.com, Amy. So if you see it there, if not, then I can always type it in the chat for you. And Suli Piring is asking, what is the process to get your employees insured?
So for team benefits, right? Typically what is offered by a corporate or a business, first and foremost, is health and dental coverage. So if they have instances where they need access to medical care, they have that subsidized disbursement. This is an awesome option for maintaining that talent inside of your business, right? Making sure that they have that financial security so a medical emergency doesn't come, a financial catastrophe. Reach out to me if you want to talk about building out a remuneration plan or include benefits inside of your remuneration plan for your team. And of course, you can also build into the team benefit package, critical illness, disability coverages, right? How that is structured may differ because, of course, you want any benefits paid to them to be tax-free, right? So these expenses would more than likely be charged back to your team. So
Mhm.
just so you know. Action steps that you need to take. As I said before, this can happen to anybody, regardless of health, regardless of age, regardless of circumstances. And I believe if you have no money in the bank, right, you don't have a personal buffer, this is when you need these tools most.
Mm,
Right? So have a conversation with a professional, get your risk assessed,
mm,
and have them walk you through options because for all situations, there's also a budget-friendly option if finances is a constraint for you.
mm. I think on a final note, do you have a story of a maybe the worst situation you've ever seen uh happen on your front? Like it was just something that's like memorable and you just it's something easy to recall. Like what did the family
Well,
go through?
I'm going to share a story that anybody listening can go look up, right? It's a story of Dr. Greg McGluckie. Right? I saw him at an event. He was a chiropractor, right? He had a successful business, and he went overseas to go watch a game, right? He went across the border to go watch a game. He got struck by a car. He was in a coma for 30 days. He had multiple operations, right? And luckily for him, he had insurance, both travel insurance, because that covered a $1.6 million medical bill, right? And also he had disability insurance. So
Mm,
for the months to years of rehab that he had to do, he had income coming in. His story is that he could not go back to his chiropractic practice, right? Because not all stories have a happy ending. But because he was prepared financially, right? He had funding coming in so he could pivot his career, find a new path, and not strain his family to the financially. Because financial strain has different spin-off effects, right? It strains marriages,
Sure.
it strains relationships, the stress levels not only for the individual, delays recovery, but the extended family, as you even said in your case.
Mm.
And another story from a life insurance perspective, right? This person, he had life insurance policy and he went for the permanent option whereby he was building cash value inside of his policy. It turned out that he couldn't maintain the policy as planned, but he didn't cancel the policy. And 7 years later, right, after having stopped paying that policy because he had that cash value built up, it was maintaining that life policy for him, he passed away. And the family was able to get that tax-free death benefit payout, which paid off the mortgage and provided for his kids' college education.
Wow.
So again, this peace of mind to me is priceless, right? So I know individuals don't like the name or the word insurance, but ignore the word. Just look at what it does for you and your family.
Yeah, especially the tax shelters you can really get out of it, right? It's very important to understand the foundation of not having to pay tax on the money that you do collect, right? Sure, it's a sunk cost, but at the end of the day, if you can afford to put a little bit of money aside for something that's gonna long term protect you, it's something you should definitely consider.
Yeah.
Excellent. Well, it doesn't look like there's any more questions, Cardine. Thank you so much for your time today. Really do appreciate it. I learned a lot. Certainly, I'm sure most of if not all of the participants learned a lot as well. And I put the contact information for Cardine in the chat. Cardine, if you'd like to share the presentation, I'll get one of the students or our programmer to send out the information to all the participants today. And that way we
Sure.
have all the content available for your business and of course, all the things that you've talked about today.
Great. I'm happy to share this information because my goal is to help business owners create a stronger foundation for their business as well as their family. Because
Love it.
ultimately, the ripple effect is that we have strong families, strong business, and a stronger community because we have that confidence when we move forward in life to pursue opportunities as well as to ensure that when it goes sideways, we have money coming in.
For sure. Excellent. Harding, appreciate you so much. Thank you. And for the participants, we'll see you again next time. We have lots of great sessions coming up, and Hardin is just a bucket of a lot of knowledge, and we're going to extend that out over the next couple of weeks. So check out our calendar. We have lots of things going on, and we'll see you again next time. All the best to you all.
Goodbye, all.